A sense of capital.
Aloha, lads and gents. Welcome back to a new episode of A Sense of Capital Insights Time. Your host of today is Julian, and I'm very glad to have you in. Actually, currently nobody's watching, but I guess that will change quickly because at the end, STONECO, the company which we will back today together, the earnings release of this quite Latin American popular company, at least for those of you who know it. I guess it definitely has a loyal audience, a loyal stack of investors who are convinced by this company and their performance, and actually I'm part of it. So guys, very glad to today can sharing the live stream with you guys. But before we jump into the details, before I brief you a little bit about the company for those who are new to the sense of capital, who are new to STONECO, I will start with a quick disclaimer, which is very important, that in the upcoming minutes will not be any financial advice, consultation whatsoever, and there is no guarantee of correctness for the provided data. Very important, guys. It's always your decision what you make, and it's your money, so always be careful with your due diligence, research process, and of course decision making as well when you receive information from me during the stream about, for instance, a company like STONECO. Guys, let's jump right into it, because I think based on my experience, let me quickly check this. I think STONECO 1 quarter ago, Q1 2024, they released their earnings 5 minutes after 4 p.m. ET or 10 p.m. Central European Time, Leipzig, Germany, where I'm located, so 5 after 10 p.m. And so guys, let's waste it again one more time, and let's quickly share and talk a little bit about STONECO. STONECO, actually, I know you should never get emotional about investings, but honestly it was a little bit like my first and old love when we talk about investments, even though that has changed a little bit in the past. Yeah, so it's not that favorable stock anymore for me. However, what is STONECO? STONECO is headquartered in Brazil and has basically two major businesses. Yeah, the absolute primary business, basically 90% revenue generation, is or are their point of sales terminals, POS. Yeah, so you see this kind of terminals, and then you can pay your money with debit cards, credit cards, with your smartphone, or just with using QR codes. Yeah, depending on the final methodic which getting utilized. Yeah, so that's basically their original legacy and core business, but they have additional other software and product solutions they offer. As you can see here, some ERP solutions, digital warehouse software solutions for retail stores, for restaurants, to get more information out of the retail process, of the stats of the customer data. That is all a little bit, let's say, combined and connected to this POS terminal. Then the second primary business, which is covering roughly 10% of the revenue, is Links, actually. Links was an acquisition which took place, I think, 2022, 2021. And if I'm not mistaken, it was the largest digital acquisition in the Latin America region till this date. It was, I think, more than $1 billion actually. And so, as you can see here, what is Links? Links is basically an ERP software solution provider. So as well, where software solutions, like you can see a little bit like here, but they are 100% focused. And special is that STONECO's core solutions getting provided just in Brazil, just in their home market, and Links is present in 16 different, I think 17 now, 17 different countries, so I guess they expanded. And those solutions are strongly focused on key accounts, on large companies, as you can see here, Shell, Toyota, a lot of quite popular players. While the payments solutions, they're getting more rolled out with a focus on SMB or even MSMB companies, so micro, small and medium-sized businesses. that is how they basically structure a business. So one more time, core business, 90% revenue, STONECO, MSMB, customer base, links, ERP software solutions for different kind of retailers. You see here restaurants, public pharmacies, for instance, all of this kind of stuff. Active in outside of Brazil as well, and more focused on key accounts. Yeah, this is how it works. Guys, let's go a little bit further in it, and here I want to show you a little bit how it looks in reality. You can see here, I mean, they really try by doing this acquisition in the past to dig this kind of synergies and network effects through the different solutions. Yeah, and so they have this payment terminals, they have the software ERP solutions, and nowadays actually you can see it here, the third pillar, which they're getting rolling out and expanding to more aggressively day by day. That's the banking business, so financial services, loans, and now very new to it is credits, as you have seen in my I guess we have two viewers over here. One is live at the stream, and another one is my dog, which is walking around at the kitchen. I'm not used to it because regularly, as you know, I'm streaming through when I'm sitting in the car, and I've changed the setup, so now I guess I need to spend time a little bit with the dog while streaming. However, let's go on. So first pillar, major pillar, payment solutions. Second one, ERP software, links. And the third one now is banking, which is really the future potential driver, already quite strong in terms of loans, and the credit business, on the other hand, getting really strongly focused out since I think 2 or 3 quarters. Well, we'll check this out later together. But look, this is how it's getting utilized, all of the solutions in the reality. You can see payment provider, inventory control through the software systems, then ERP solutions, and then of course banking. So really covering 360-degree angle, that's the target. And you can see here, I mean, you have different products which getting displayed at the point of sale terminal. Then you can enter different client information for the CRM, so for the customer relationship management system, which is, for instance, which can be as well as Salesforce, but on the other hand, you will connect it very likely with STONECO's own solution, so you can enter all this data. Then you connect to this data and the product the customer is interested in, the STONECO payment card, and you can pay with it, contactless basically. As you can see here, you get out a receipt or an invoice, yeah, with a QR code or without one. All of this information getting after the procedure transferred into the retail software. Different kind of informations, yeah, which getting combined, yeah, and getting connected as well to the inventory management. So you, for instance, sold a pair of shoes, then of course this pair of shoes getting deducted by the inventory management. And so you have here everything basically listed, the account as well for, not of course the account out of the customer of the store, but the customer of STONECO, which is the shopping, the retailer. So basically what you need to know, STONECO 100% focus B on B, yeah, not business to customer, business to business. They have business, all the customers, all the numbers you will see when the customer account increased. All of this are companies, even though most of them, as I mentioned, are even micro ones or small companies. Yeah, that's what you need to consider. And so you basically, you can cover really the whole process, and really it's one to-go solution, let's say it like this. Yeah, it's covering a lot of dimensions. And of course, for me, basically one of the business case, I like this kind of payment terminal solutions. Even when I was delivering pizza at college times, I was wondering if I can invest money in this kind of companies. But what I liked, I mean, this company compared to a lot of other players like Toast, I'm missing it, but however, so compared to a lot of other players basically, is that they have this strong software business as well, and they want to set this higher focus by utilizing the link solutions. And honestly, till now, those potential synergies didn't created so much momentum till now, to this date, but let's see if this will change. I have strong hopes because it recovered last quarter, but more later on to this. Let's take a quick look on the stock price. As you can see here, it looks quite stable through the last year to date. It's down 26%. There are different reasons for this. One of the reasons is, and actually it started a little bit by this news, is that Warren Buffett was a shareholder, or let's say Berkshire Hathaway, the company he's the founder of and the CEO, was a shareholder of STONECO since IPO basically, and he announced, or Berkshire Hathaway announced, they released the full stack, the full investment of STONECO, and the market didn't appreciate it at all. When the oracle out of Omaha is de-investing the money, yeah, so it is how it is, and we as investors need to live with it, or we need to sell the stock basically, and I kept on it. Yeah. However, when we talk about STONECO, that you get an idea about the overall dimensions, you can see here the overall revenue, total revenue per year, and that's stated in US dollars. But when you take later on a look, they show their own results, and here it is stated as well in Brazilian real, the local currency. Yeah. Let's take a look one more time on the EV, and as you can see, it's roughly 4.5 billion US dollars. Was more in the past, was less in the past, but what you can see here, the debt cash level is quite fair, and they are a profitable company. They're making money, as you can see here. That's going very well in the past quarters and developing quite strongly. So they, even though there is a certain level of cash existing, it's not like they're running out soon of money. That's definitely very unlikely. Let's take a quick look on the earnings results in terms of top line and bottom line of the past quarters. And you can see on the first glance in terms of EPS, earnings per share forecast, so profit-wise, it's developing quite strictly, quite reliable. And if they are not missing it, and that happened only one time in the past, let's say 10 quarters, most of the time they're beating it. So here they are very reliable, and it was quite, and that's of course as well a negative driver when we talk about the stock price of STONECO. It was not just selling the stocks by Berkshire Hathaway and Warren Buffett. You can see as well in the past quarters they had struggled a little bit, let's say it like this. First in terms of revenue, and afterwards, even though the profit side was very strong, and afterwards they really missed on both sides, EPS and revenue wise. So I hope they recover right now and cover those targets. I mean, 3.4 billion, for instance, Brazilian real in this year wasn't low at all. In this quarter wasn't low at all. But yeah, I hope now they set up the targets a little bit more realistically to not negatively surprise the market one more time. Let's check out quickly the currency. I don't want to add too much words, but as you can see here, since 4 years, it's quite stable when you see the exchange rate, currency exchange rate between Brazilian real and US dollars. Since year to date, it dropped quite heavily by 10%. What is the reason? Always difficult, of course, to evaluate it and find a valid opinion. My opinion, but at the end, is that the Brazilian real, they already started to decrease the national interest rate in Brazil, the Selic rate, and US didn't starting this process, as you know. And so, yeah, of course, if the overall volume of Brazilian real increases and the US dollar amount of money stays stable, then demand and offer side is not in balance anymore, and then it's just reasonable that the Brazilian real getting weaker compared to US dollars. So something definitely what we need to keep in mind. But however, I mean, in the past 5 years, it was more or less quite stable. Yeah, when we put in brackets the first year, let's say it like this. However, When you invest in companies in the Latin American market or in Brazil, political and economically stability is always a big aspect. And as you can see here, that Moody even improved the Brazil credit rating outlook in the past in May 2024. So almost when STONECO released their Q1 2024 results, and that is basically a good sign. Of course, risks are existing, and you never know how much political stability is really existing, especially when new governments getting elected, for instance. Yeah, but however, overall the outlook could look way worse. I'm not seeing so many negative news about the economy of Brazil or in general Latin America. I mean, of course, Argentina, whatsoever, Venezuela. Sometimes when we talk about the currency or about the political leadership, it's definitely questionable. But I guess that's at the moment at least not a big issue in Brazil. Yeah, maybe you see it different, maybe you are a local one. So feel free to share your opinions. Guys, now a little bit more information and digging deeper in STONECO itself. And of course, the second major brand, Lynx, the ERP software vendor. And you can see one more time what I've mentioned already. Lynx is highly focused on the large accounts, on the key accounts, basically key customer base. Ton is the cheaper version of the STONECO functions, and Ton is focused more on the micro MSMB business customer base, so the smaller shops in the Brazil. And SMB is a little bit separated, but honestly, very likely STONECO achieves way higher revenue per year in the SMB business than Lynx. Yeah, so that's very likely. And however, when we talk about the TAM, the total addressable market of this company, as you can see here, what I want to show you, yes, I mean, they are active since a few years, and there's even competition going on. We will talk about this in a moment. But what this displays you, and we're talking about Investors Day slide deck of 2023, so quite up-to-date information, is that there's still a lot of potential when we talk about the TAM. Yeah, no matter if we talk about the payment business, the banking business, software business, and especially the credit business, the future potential driver of STONECO. Yeah, that's the message of it. How they are present in the market, how is STONECO especially present in the market. And you can see here they have different kind of digital channels like a lot of companies nowadays, but what they have actually, what is very special is they are really customer orientated. And yes, you can compare different kind of companies to each other. Yeah, like for instance, how is Toast acting and how is compared STONECO acting with their point of sales terminal solutions. But in the end, you can see here that STONECO is taking a huge focus on the customers by those 600 plus Stone hubs, which are located everywhere, connected located in Brazil, and additionally 300 plus software distribution franchises and centers. So it's not just covering digital channels to acquire new customers, to operate, to serve the customers, yeah, and maintain their solutions. No, they really have this kind of hubs, and they try to educate with different kind of presentation sessions the customer base, and try by doing this to reach new customers, basically. So that I like this approach to really being high customer focused. And you can see here on top of that, they're working with a lot of strategical partners. And I mean, look, that is as well something what I want to show you very quickly, and what a lot of times doesn't get considered by numbers. It's hard to cover this by numbers simply like this, yeah. But look, they have their own sales platform, their own CRM system, what they use internally. They have their own logistics platform, and they have their own client service platform, basically, yeah. And this is something as well, a lot of know-how, even though solutions are maybe worth some millions, very likely, and they are not, it's good for, let's say, the cost base, yeah, for the cost margin efficiency, and they have always control about all of this, and they are not, for instance, when we talk about sales platform, they are not highly depending on Zendesk or on Salesforce or on HubSpot or something like this. Yeah, this is what I really like. They utilize their own solution, Marco Polo, and that's it. Yeah, and you can see here when we talk about the onboarding process, they cluster the country in different territories and have different informations about these different territories and regions inside of these territories, as you can see here. And then by doing this, they select the customers, different roads, how they want to go to the different retail stores with their sales team and go to those customers and acquire them. You can see here all of this getting included into their daily routine of their sales staff members. So it seems a little bit non-relevant, but all of this is of course an aspect why you might be interested or invested in this company, yeah? Because really all of this are differentiator when we talk about competitors, basically, yeah? You can see as well the pricing, how they can set up the best pricing for them, bundled packages, so really going for the synergies, payments. PIX is basically the national payment method, banking, insurance, so really try to convince the customers and utilizing the complete solutions, the complete portfolio of information they have to really get the customers, make sure they're quickly getting provided and supplied with their point of sales terminals, the service of point of sales terminals getting maintained, and on top of this, customers getting serviced very intensively. Yeah. Okay, guys, I guess 12 more minutes and then the earnings results should be live. Now we dig a little bit more into the numbers. Before it was a little bit softer, as I mentioned, and more difficult to cover the numbers. Now we talk about the guidance, and they announced in November 2023, so yeah, already 9 months ago, they announced their mid and long-term guidance, which is quite special because actually a lot of companies are not keeping it like this. And on top of it, their 2027 midterm guidance is quite strong, or let's say long-term guidance maybe is quite strong. As you can see here, the micro, small and medium business total payment value or volume is getting increased year by year on a compound annual growth rate of 13%. So very, very solid. So TPV basically means that what kind of percentage they take out of each gross revenue margin, gross revenue their customers producing. Yeah? So if a customer comes to a retail store where the point of sales terminal of STONECO is active and he buys something for 100 Brazilian real and the TPV is 1%, 1 Brazilian real goes basically to STONECO. Yeah, that is their major business case. And then we have client deposits. As I mentioned, they're rolling out more and more the banking businesses, and of course they can utilize those client deposits, and as you can see, that's growing as well very strongly with 26% year over year. And guys, I'm invested into this company because it's basically for me a profit bet, yeah, profit growth bet, not a revenue growth bet. All of my other 6 stocks I'm shareholder of, for me, are I've purchased them, the stocks, because they have a revenue growth focus or a profit revenue growth focus. But this only I am invested because of the profit growth. Yeah, just profit is focused here, and you can see when we take a look at the credit portfolio here, that's really a very likely strong future driver. 90% CAGR year over year. Currently the portfolio, the working capital is just 0.8 billion Brazilian real, and the currency exchange rate is US dollars Brazilian real. One US dollar is roughly 5 Brazilian real. So you can see they want to go for a credit portfolio of roughly 1 billion US dollars in 2027. So in roughly or maximum, let's say 3.5 years. Yeah, 90% growth. That's really a strong outlook or strong forecast, strong guidance by them. Let's say like this huge targets. And here we can see as well the take rate. They want to increase it. That the net income, all of this looks quite strongly. And what is, of course, what we should not underestimate is the adjusted expenses. And as you can see here, they targeting to keep them quite stable or almost low, with only a year-on-year growth by roughly 9%. Yeah, so everything else, all different income sources are growing way stronger. And the expenses, on the other hand, they try to target it and keep it very solid. Yeah, so big thing. And of course, I mean, there's a reason why I titled this that the credit portfolio or the credit business will be maybe the future driver, because actually the management itself is stating it like this with 90% year-on-year growth. Okay, let's go on. I already mentioned Berkshire trimmed their position and lowered their stack of a lot of different companies. But what was a little bit unfortunate, as an investor for STONECO, they sold the full stack of STONECO, and that was a little bit the beginning of the selling process and investors getting rid of their positions of STONECO. Another information which was not that positive, but I need to be honest here, was in March the 18th this year. As you can see, they announced that heavy board changes took place. You can read it by yourself, but one reason why they changed their board that heavily and the top management primarily is because really want to utilize a little bit more the potential in terms of the software business links, because as I mentioned, since acquisition in 2021, it didn't run so well. The synergies between STONECO and Links business didn't work out as they expected, at least from my perspective. And another big reason is, of course, as well, because of the banking business, yeah, the financial services. Yet now still it's not a traditional bank, STONECO, from my perspective at least. But however, they're setting a higher focus, and guys, people are complaining about it and telling, look, STONECO is valued too high because it's actually just a regular bank. I see it different, yeah. And a lot of analysts on Seeking Alpha, for instance, yeah, let's say amateur, not professional analyst page and stock information page, there are a lot of analysts, they lowering the rating in terms of STONECO because, yeah, it's a bank, too high valuated. But guys, the truth from my perspective is, look, when we compare, for instance, SoFi, yeah, where people as well mention SoFi is way more than a regular bank. It's not just a digital bank, a fintech or whatsoever, because next to the traditional banking services like credit cards and loans and banking services, investing services, they have Galileo, yeah, which other bank institutions and organizations can use as a platform to basically digitalize their banking. Yeah, okay, I understand it, but how do people out there, especially customer base, see SoFi? And primarily, I guess they see it as a bank. As a bank, yes, with a large and growing customer base, but it's a bank institute, yeah. But now let's take a look what is really how STONECO is representing theirself for the people, external people, to customer base, for instance. And you can see when you go to their website, stoneco.com.br, you can see it starts really with the point of sales terminal, their core business, their business. Guys, I showed you a moment ago how they utilizing and acquiring their customers, how much focus they set on their slide decks, yeah. And they do all of this effort because everything starts for them with their point of sales terminals. This is how they're keeping it, yeah, with their point of sales terminals, and maybe with their software solutions, yeah, as you can see here. But it's not like people are interested very likely in credit support or in loan support as a whatever, as a food shop, yeah, food store or grocery store, small one, and then they reach out to STONECO or to Links. No, they reach out to STONECO and to Links because they're interested in point of sales terminals, and they are interested in software solutions. Yeah, this is from my perspective the crucial aspect. Why, for me, STONECO stands as a bank, and not as a bank. It's not a bank. Should not evaluate it as a bank, but as a fintech. Yeah, and of course, they're going for loan business, they're going for credit business. If they would not do it, investors would be anyhow mad, yeah, and would tell, look guys, why are other companies offering credit and loans or whatsoever, or buy now, pay later options, and STONECO is not doing it? Then they would be mad as well. So I like that go and dig this potential. However, another big aspect, so rolling out the banking business, integration of the ERP software business of Links, and another aspect is that the original founder, Mr. Andrew Street, left the company after years and years, and that of course was as well not great news for the company. We need to be honest here. Let's focus a little bit more some news, but I keep it very superficial. A flood was going on in May, and investors might think, okay, what is the impact on the performance and the results of STONECO? But the management of STONECO announced at the latest earnings call Q1 2024 it will be quite compact, and I think they mentioned something, but if I'm not sure if I'm correct, something like 5% decrease of the revenue. Yeah, so really limited, if that might be the case. Then they're getting ranked by Interbrand, a big analyst house, as one of the major companies, the major brands, basically most popular brands in Latin America and in Brazil. Out of 25, they reached rank 12. So as well, nice result. Then they get some upgrades in terms of their rating, as you can see here by JP Morgan of overweight, or here by UBS as well. They improved the rating. Nice to see. Something else what is interesting, because of all of their point of sales terminals, all the software they have working in the different locations around of Brazil and around of other Latin American countries, they have access to a huge amount of different information, and basically they have an own indicator nowadays how the economy is working and how the different kind of businesses are working because of this access, and they grant because of this big information, they grant access to other to this data to other companies basically. Yeah, so this is something what we should not forget. I mean, at the end, they don't need to rely as strongly on external economical data like other companies. They are straight at the source with their business, with point of sale solutions, with banking, and that's as well an aspect when we talk about granting the customers loans or credits. Yeah, they have very good insights when we talk about how financial stable are their potential customers or their potential banking customers especially. Not just because of the traditional banking KPIs, but as well because of their insights, what they receive through their other solutions. Yeah, so that's interesting as well. Then we have here a major competitor of Bank, and guys, we need to check quickly. Sorry for the quite spontaneous break, but we need to check right now if the results come up, because then I immediately will share them with you, and on time we'll go through them. But you can use as well the chat if you like, and let me know when they are live, and I try to check the chat here and there so I'm not missing them. However, major competitor is Bank. It's way older, it has way more legacy, and actually the major source of this business is banking. So they are way more a bank and rated as a bank compared to STONECO. So their legacy business, the original one, is banking and financial solutions, and then they rolled out their point of sales terminals, and basically STONECO approached to the market in a different direction. They started with the point of sales terminals, and then STONECO added their banking and financial services and product portfolio. However, we don't need to go too much into the details, but if you're interested, you can check out by yourself PAGSEGURO. It's always interesting, and they will release their earnings results in roughly 6 well, how much is it? 8 days. 8 days. So always nice to see. I mean, if they achieve strong results, as you can see here in Q1 2024, and STONECO is achieving misses, that is of course not what you like to see. That is not what you like to see. Yeah. So I always take care of PAGSEGURO as the major competitor. Let's say it like this. One more time, checking the results. Could be any minute right now that they release them. I guess maximum in the next 24 minutes. But as I mentioned, 1 quarter ago, they announced them at right now at 5 minutes past 4 p.m. ET. Okay, guys, we talked a little bit about news, about the core business, overall developments of this nice company. Now, I want to share quickly some information about the recent earnings results. Guys, let me check quickly if the chat is working. Yeah, it's looking good. Great. And here a quick reminder at this point in time, if you're interested, feel free to like and subscribe, and of course follow me as well on other channels. I always appreciate this if you appreciate as well the work. So if you have seen my earnings Roundup stream a few days ago, then you have seen that I rated negatively, and primarily this was not because of the more detailed background developments of this company. As you can see here, yeah, there have been some negative highlights, but it was primarily driven really by the overall top and bottom line growth, revenue and profit results. Yeah, so if they have been yellow, easy, this will be a neutral verdict from my perspective. Yeah, that is because at the end there have been as well a lot of positive parameters which they announced, like the software division is recovering in terms of revenue and adjusted EBITDA. There's a lot of banking client base potentially left when we talk about comparing to the original payment client base and the banking client base, because look guys, they have, you see, almost 4 million payment clients, but there's a big potential that because they already, the doors already open to their customer base, yeah, and it's it's quite easy for them to transfer them as well and convince them to be active banking clients in the future. And you can see here there's still a 35% gap to go for it, yeah, and then of course doing upselling and cross-selling as well there, yeah. So definitely strong potential when we talk about the legacy business and the banking business right now. And the guidance is on track, and that is a very important, most crucial aspect for me. Really, I very likely, honestly, would not be invested anymore in this company if the mid and long-term guidance 2024 and 2027 would not be stable anymore. The one we discussed right here. So if they somehow decrease it, adjust it negatively today, honestly, the chances are not that small that I will sell my full position of STONECO. I am invested in 6 stocks and 6 companies, and this one is my sixth, so the lowest favorite ranked stock I'm invested in, with roughly $12,000 US. Not that bad, but however, I mean, look, I'm invested as well in Nubank, and Nu is for me just since quarters just a little bit better fintech business, banking business. Honestly, that's my opinion, but it's of course a little bit more, slightly more expensive from my perspective. However, if I see the chance that somehow Nu is dropping and I can invest more money in it, and on the same time STONECO is missing and losing track and trust in on the investor side, the chances are for sure not that low that I completely sell the position of STONECO. And as well, even if Nu is stable or whatsoever, and today they somehow really not covering any more than 2024 and 2027 guidance, what you can see here, if they somehow impact it negatively, I'm not sure if I would stay convinced, even though I like this business very, very much, and I'm almost a little bit emotional about it, which I should obviously not be. However, guys, quickly let me check if the results are public. Not yet, if I'm not mistaken. Okay, that's good. let us check quickly what is going on with the price, because the market, I'm not sure if it has already closed. Yeah, it has. The stock, you can see the last days, one moment, in the past days, the stock price recovered a little bit actually, as you can see here. But yeah, today now the first information doesn't look so great, but let's see what will be the outcome. Yeah, so any minute, any moment, they will get released. And oh, you can see it already here. They are released, the number are public, and let's check out as well if the details are accessible. This is what I don't need anymore. So the performance of my laptop is a little bit struggling. So okay, they are live, as you can see here. Yeah, and I mean, we can go back a little bit. You can see already on the first glance, bottom line growth, a beat. That is nice to see they recovered here. But obviously what will not satisfy the market too much is the revenue side, and they missed it. Even though it was a quite tiny compared miss, it's a strong miss. But however, guys, let's waste any time and go into it by checking out the press release. Let me check if it's good size for you guys. I guess I can make it a little bit larger, just a little bit for you. Okay, I think you can work with it. Let's go. And we start, of course, with really the revenue. And guys, I've prepared an Excel sheet like I always, keeping it like this, as you can see here. And my expectation, as you can see, it was EPS 1.64 to grant them a neutral verdict from my side, a neutral rating. So a small beat with 0.08 Brazilian real. And I wanted to see as well, of course, a beat in terms of revenue. And I mean, we already have seen it a moment ago. It was 1.61, so slower than my expectations, lower than my expectations. Still, I would rate it neutral, guys, because I mean, it is a beat. It is just a small, tiny difference to my expectations at 1.64, and I'm just simply happy that they recovered. Let's say it like this. But the revenue, let's go back to the presentation slide deck, the press release. Here we have the revenue, and that is, from my perspective, honestly, this wait, that is are the highlights for first quarter. That should not be the case. Okay, oh look, I clicked here. Oh man, oh guys. Okay, now we go on with it. And STONECO report second quarter, adjusted EBITDA. All of this is okay here. We see it already, 1.61 Brazilian real. So that's a strong development. But however, let's go and dig a little bit deeper. So revenue one more time, 3.205. Oh, it's really a small miss, small miss, man. However, I will enter it. Let's go back to it, and 32206. Here we are, and again one more time when we compare it, yeah, I expected something like definitely a beat, more than the forecast of 3.2 billion Brazilian real, and they strictly missed it. I don't want to talk around this. For me, it's straight negative. It's luckily not a huge miss, but that's something what I can't accept as an investor. EPS is fine. I'm happy that they recovered. Revenue side-wise, I'm not that happy. Yeah. So that's it when we talk about bottom and top line growth. And now we go a little bit more into the details. Yeah. What I like about their how they announce their results, they have always quite nice structure. And they granting a lot of information. What I don't like, I don't want to invest anymore in companies where the information level is very low. And I'm invested in a company which is called Alphen, and that's the last company where I'm not satisfied at the moment with the level of information, transparency. But STONECO is the total difference, difference. And we can see it already here. They mention that they are on track in terms of 2024 guidance. That's great, because as I mentioned to you, if they adjust this guidance, I'm very likely very quickly out of this investment. Not lying to you. So that's looking good. But what is with the 2027 guidance? If they're not talking about this anymore, I'm getting a little bit concerned, but we will check this out in the moment. They adjusted a little bit how they announced their solutions. That was different in the past. So they separated it now. You can see it here in the payment sector, in the payment solutions, and in the banking solutions. So yeah, and then we have as well the credit solutions, the most current business, what is the newest one basically. Okay, and they have CTP. Okay, some new stuff. However, we will try to go through this together. That's just the washing machine here. Okay, let's go through it. Look guys, as I mentioned, I prepared some information, and we start with the MSMB TPV, so the total payment value, as you can see here in the first row. Maybe before we start with it, we check first one more time the revenue side, yeah, and that you can read it. I can't do it smaller anymore and zoom out more actually, guys, so we need to be a little bit flexible over here. But you can see here on the right side the year-on-year growth Q2 2024 in terms of revenue, and the year-on-year growth Q1 2024, so 1 quarter ago. And you can see 1 quarter ago it was roughly 14%, and now it's only 9%. So man, that's not nice. Really not nice. I mean, even though I'm invested because of the profit development, the profit growth in the future into this company, I want to see that revenue is still somehow developing on a solid base. And that doesn't look to me at the moment right now, actually. Okay, MSMB, TPV. Let's go back to the presentation slide deck. And we have it right here already. And they separated in card TPV and PIX TPV. So as I mentioned, card TPV, credit card or debit card TPV, very classic. You just push it through the point of sales terminal and it's done. And QR code PIX. PIX is basically, one more time, the national payment method which getting provided. So it's cheaper for the customers of STONECO. They don't need to pay any fee to the credit card or debit card vendors, for instance. And as well cheaper for the customers of STONECO, so the retail customers basically. But however, we put them together, and as we can see here, it's 109.3. And let's go back and push it into our Excel sheet. Here we go. And 9300000, a lot of zeros. Okay, and that honestly we can take or let's put first all the numbers in it, and then I will let you know what is my opinion about it. Yeah, so now we take a look at the focus on the key accounts. Only the fat marks are the one which I consider at my verdict and my evaluation. However, I want to add as well the numbers when we talk about the customer base, for instance, as we see here, to have just better insights. So we start with the key accounts total payment volume. Let's go back and we have it. Here. Yeah, actually they're granting, if I see it right, they're granting, while now splitting more and more the information, they're granting even better access to the information. I like this very much, and based on this I will adjust my evaluation sheet for sure for future calls. Yeah, so 16.8 billion we have over here. Let's go back, edit 16.8. good, we got this. Okay, so far I can already tell right now, the details are not looking that bad actually. Details doesn't look bad. Maybe it's even the chance to stack up a little bit the investment because the market is not realizing, but the details behind the curtains are looking great actually so far. But we talk about this in a moment. Now I want to see the PIX TPV. I hope they are still showing it somehow, and I don't need to PIX. Okay, I need to add it. So 11.5 plus 15.2. This is 26.7. 26.7, 26.7, 26.7, going back, not forgetting the number, 26.7. Is it enough zeros? No, one is missing. And, okay. And this is something what is quite interesting as well, because in the end, I'm not sure what is the margin, what kind of take rate is existing when customers using this PIX payment method by this governmental one, this national one, and not the one by credit cards, debit cards. Yeah, and I expect the margin will be lower for STONECO, so it's a lower margin business, and so I want to see as well that it's not developing so crazy at the end. Yeah. However, let's go through it and check and take a look at and spotlight a little bit the customer base. Yeah, one more time, going back, and here we are, active customers, 3.86 million business customers. I think that looks good. Yeah, okay, and then key accounts one more time. I'm going back, and that's 52,000 roughly. Okay, and then we go back and we go to the take rate, very crucial number from my perspective. The take rate we have here, and currently we have €5. So guys, very happy to have you in. Yeah, and TJ8073, you just mentioned it, or you now seeing the chat actually, you mentioned that I selected the wrong earnings press release, so thank you very much for providing me the hint. Very lucky that somehow we resolved it, let's say it like this, yeah. Somehow you sent me mentally through telekinesis this information, I guess, so thank you very much for this. However, MSMB take rate, and let's see where we can find it. MSMB take was flat sequentially with 2.54%. Of course, that is on the first glance not that convincing. However, it's already on a quite strong ratio, strong level. So here we added, but that's something what I don't like to see, of course. And now we check finally to basically evaluate the point of sales, core business. We only need the last KPI, and that's the key account take rate. So again, one more time, the percentage, what they take out per Brazilian real, what their retailers achieving as revenue to their customers basically. Okay, let's go back, key account take rate, and see if we can find it. Here's it, 1.33, it's increasing, so that's actually good. And in a moment, yeah, it's looks a little bit surprising, guys, because my first opinion, my first tendency was not that positive actually, guys. But we start with the MSMB TPV, guys, yeah? Do I share the screen? Let me check it out. Yeah, it looks good. And now when we go through it, yeah, and you can see I only take a focus right now on this three fat marked KPIs, yeah, MSMB, total payment volume, and you can see that increased very, very heavily from quarter to quarter. Actually increased that heavily. Did I check it one more time? One moment, I'm not sharing the screen, just want to make sure. It was, oh no, it was 109.00. Okay, good, glad glad that I corrected it, guys. Sorry for this. However, now it's correct. And when we compare it to the last quarter year-on-year performance, as you can see here, the development is positive. It's even increasing. Yeah? And again, the customer base, the level of reaching new customers, especially in the MSMB business, micro, small, medium-sized businesses, it's somehow limited. They even stated it in the latest earnings release. And so it's great, and it's, for me, a strong development that it's up 2% year-on-year increase. Yeah, that is what I really like to see. So it's actually accelerating. So from me, I have no other choice to rate this positively. So that's already a really good sign. That's great. That's great. Now we're going to go on to the MSMB active payment client base. Yeah, I mean, always great that they're achieving more customers, but it's just about the active ones, of course. And here you can see on the first glance, when we compare year-on-year growth Q2 and year-on-year growth Q1, you can see on the first glance that it's getting lower. They're reaching their peak. And that is something what we as investors or people who are interested to invest in this company, from my perspective at least, need to be comfortable with, because again, they already have this kind of almost 4 million customers in this market. Yeah, and I mean 250 million citizens are living in Brazil, and these are roughly 4 million businesses, not citizens, 4 million businesses. Yeah, so they're covering a huge share of the market. And so for me, 30%, decreasing it by year by just 3%, maybe on the first glance doesn't look that satisfying. However, the truth is, for me, it doesn't look that bad. So I will rate it as neutral. Yeah, not that positive, but not on the first glance that negative. And Googie 2003 is writing something to chat. I thought that would decrease with the recent press release. Yeah, we come later to the debt, I guess. But let's check it out. But actually, I'm a little bit more always on the profit and revenue side focused. Yeah, I'm not that worried when we talk about STONECO that debt would be the big issue. Maybe I'm wrong, but actually that is something what I am not spotlighting too heavily at the moment. Yeah, but yeah, each on their own, of course, and I understand this perspective, this focus. However, let's go on and take a look at the MSMB take rate. Very, very crucial number. I'm not sure what is I guess really when we talk about all those three numbers, that is very likely the most crucial one for me, because that is more kind of a margin, let's say it like this, a very gross margin, let's say it like this. Yeah, and they want to come to a level of, I think, 2.75 or something like this till 2027. So they need to take care of it. And of course, there are reasons they're increasing it or they're decreasing this take rate. Yeah, it's up to them. Yeah, how they use it strategically. Last quarter, they increased it, and they mentioned that in the earnings call that they can do this because they are simply more competitive with their solutions. Yeah. And with their network of customers, a network of sales team and service team and this kind of stuff. And so I guess in general, it actually doesn't seem too negative, but that it's staying solid, it's negative for me. I want to see it's increasing each quarter by quarter. And so I rate it negative. Yeah. However, what I don't want to put under the table, yeah, I mean, in general, we can push this here and give it a rating of a neutral one, yeah. When we create a blend out of these three ones, we have one time positive, one time neutral, and one time negative. For me, it's neutral. I'm fine with it. I can live with it, yeah. But what I'm not considering right now, but what I like to see is actually the key account business. The key account business somehow is recovering, actually, yeah. When we take a look here, Q1 and Q2 year-on-year growth, it was very negative with minus 60% last quarter. Now it's positive 20% almost. Yeah, something is going on there. Key accounts business didn't matter anymore in the past quarters for most investors, I guess, at least for me, because all eyes have been on MSMB business. And now it's somehow, maybe some comeback is taking place. Yeah. So that is something on the side we should not forget, and that is something very interesting. And as well. You can see here the take rate is increasing here. We can see, okay, the customer base in terms of key accounts is actually decreasing, but with a lower customer base and of course with a higher take rate, but they achieving higher total payment volume, way higher. Yeah, of course seasonality is as well existing, but when we take just a look on the year-on-year growth, and this is somehow cleaning down the seasonality effects, we see that key accounts, TPV, and the take rate somehow is recovering and celebrating and come back. So maybe next quarter, next earnings results, we will see some surprise in this direction, even though, let's be honest here, you can see when we see a ratio between MSMB TPV and key accounts TPV, it's quite comparatively tiny. Okay guys, let's now focus the banking and the credit business, so basically the financial services and products, and we start by taking a look on the MSMB active banking client base. Yeah, so how many customers are existing here and active for them. So let's go back to the report, and now we covered already the payment, the point of sale solutions, and we go on with the banking, and we have it. So MSMB active client base increased year on year by 62% roughly. At first glance looks very delicious, honestly guys. 2.704 million. Let's go back. 2.7 million, and that looks, I guess, okay from my perspective, but we will talk about this in a moment. Now we take a focus on MSMB banking RPAC. APRAC stands for average revenue per active customer. Yeah? Average revenue per active customer. It's a classic KPI, and you can see in the last quarter they achieved a revenue per active customer of roughly $29. That was increasing in the past quarters, quarter by quarter, and we hope, of course, that they will stick to this kind of development. Yeah, so let's check out what is the truth over here. So let's search for APAC, and hopefully it's oh, that is very negative. First glance, very negative from my perspective. You can see it. Yeah, there is seasonality maybe somehow involved, and you can see year on year it's still growing. Yeah, but boy guys, don't like it at all. Oh man, I'm getting closer mentally. No joke, I'm getting closer mentally that already somehow mentally losing connection to this company. Sounds awkward, but my conviction is getting less and less. And of course, if I will sell, I will not sell tomorrow. I always sleep a few nights over it, but this is something what I don't like to see. However, we'll talk about this in a minute a little bit more. Let's go back and now take a look at the client deposits. Yeah, so basically what the customer base, how much money they keep in the accounts, on the accounts of the banking solutions by STONECO. You can see it here. It's roughly 6.5 billion. If I'm not mistaken, 6472. Let's go back. 6472. Enter it. 6472. Okay, so should be fine. Credit clients. Credit is the newest business, and you can see it here. I actually covered it with one section, but maybe in the future I need to keep it like them and separate it as well, because they see it as well as a separate business. As you have seen here, payment, banking, just three parameters are covered here, and now credit. They showing way more KPIs right now, like active contracts. I think that was not existing before, for instance. However, what we want to take a look at is the credit client number. And is it existing? would be very unfortunate if it's not existing, but or do they? Okay, I guess it's not new. I guess that's the meaning of it. So that is the client customer base, and so it's 24,264. So not that much, but as I mentioned, they just rolled it out, this business. I've added it, as you can see here. When we take a look at the Excel, it's integrated. Let's go on and we take a look at the working capital portfolio. So basically the credit capital portfolio, the credit portfolio, how much money is currently really utilized and somehow on the side accessible of the customers of STONECO. Go back and let's check out what is going on with the working capital and capital loan matrix portfolio. Okay, here they call it only portfolio anymore, and it's 682 million basically. Okay, let's go back at this number as well. 682 or 680, what was it? 681. Let's stay accurate here. 60000. Okay, there we go. Then we have the default rates, different kind of default rates, and default rates is basically their customers, their credit customers, the level of payments they are missing, yeah, basically in 15 till 90 days, in 90 days up, and you can see it here, it's increasing quite strongly when we talk about 90 days up, and comparatively quite slowly on 15 till 90 days. But they, of course, it's missing payments, they need to write it off somehow, and they want to achieve a low level and keep it low. I'm not a professional, guys, I'm just a non-professional investor, like very likely you guys, and so what I tell you is just my opinion. But when I compare this to other companies I checked in the banking business, 2.2% and 1.5% seems quite low on the first glance, yeah. So even though it's increasing a little bit, it's not that heavy negative from my perspective, and as long as it's increasing not that strongly. But you can see it here, it's 2.85 and 2.6. So we add this as well. 2.85 and 2.6. 2.85, 2.6. Okay, and now we can already start to evaluate the banking and the credit business. And Wilhelm Diewald, nice to hear, Wilhelm. Wilhelm Diewald here in the chat just shared the information that while you are talking, the stock is going green. So that is very nice to see, and maybe I quickly share with you the live price. And yeah, he's absolutely right, man. Thank you so much for this information. Thank you very much for sharing this and you utilizing the chat. This is how it should be. I like this interaction very, very much with you. Appreciate. And yes, he's absolutely right. You can see it's 0.75% up right now. But I mean, a lot of will be, of course, about the earnings call as well, how the management will behave. I mean, just those numbers, they are not telling the complete story. As you already can see here, as I mentioned, key accounts looks better than I expected. Some stuff looks very, very good behind the curtains. As you can see, the total payment volume of the MSMB. On the other hand, the take rate is solid. But again, that is something what they can control, and they kept it on the same level, very likely because it's fine. I rate it negative, that's just my opinion. But you need to keep in mind that is something what really they can control, and if they would push it to 2.7%, they would just do it, simple like this, and then this KPI would look positive, yeah. So that is just something what they really can manage very well. However, I'm not happy that they just kept it like the quarter before, but this is something what you need to consider. However, we will now focus the banking and the credit. We entered all the numbers, and we start with, again, only the fat marks are the ones which are interesting for us right now. Oh wait, this is a percentage number. Should be a percentage number, so now it looks better. We start with the MSMB active banking client base, and as you can see, I mean, the year-on-year growth is way lower 1 quarter ago. Yeah. So while I discussed here when we talk about the client base MSMB in terms of payment, 33% to 30%, it's lower, but it's not that heavy. I can live totally fine with this. Actually here, roughly 30% lower, I don't like this too much. It's reasonable because on the other hand, you can see it in the row below, the ratio between active banking customers and overall active payment customers, this gap getting smaller and smaller, yeah? And so it's just reasonable that they can't address that easy anymore, the new customers and the existing payment client base, and convince them to be banking customers, because there are only 1.2 million left right now, yeah, if you can compare both numbers, yeah. And so obviously it's getting slower, but not that slow. I don't like this actually, guys, and so I push this to red. Maybe I'm too strict here because it's still quarter on quarter 300,000 more, 400,000 more. However, I keep it in red. Maybe I'm too strict, guys. Keep this in mind, but that's just my opinion, yeah. Now we take a look at this average revenue per active customer, and that, honestly, guys, I mean, yes, I rated it, the revenue red, and the take rate red, and the banking client base red, but all of this is a little bit with a tendency to neutral. It's not that negative from my perspective, but that the RPAC is decreasing from quarter to quarter like this, don't like at all. Yeah, but okay, look, guys, maybe I was a little bit too quick, but it might be some seasonality, as you can see here. 1 year ago, if we take, oh wait, I make it, now you can see it. 1 year ago, when we take Q1, take a look at Q1 to, here it is, sorry. Q1 to Q2 2023, it decreased as well, and it decreased quite heavily actually, by $11 per customer and quarter, yeah, US dollars Brazilian real, and it's getting even more heavier when we take a look year-on-year growth. Last quarter it decreased by 20% minus, and now it increased by 1.6%. So maybe I was wrong. I was too quick with my opinion about this development and comparing it to the now development. Guys, maybe it's a good one. I keep it neutral. Safety first, but maybe it's not that negative. Yeah, I guess when we really compare it to 1 year ago, it stayed way more solid Q2 to Q1. And so maybe it's even a greenish, a positive one. However, I want to stay a little bit safe here. Client deposits increased as well, and increased heavier in terms of year-on-year growth than 1 quarter ago. However, that's not for me the most interesting metric, yeah. But it's a sign that more and more customers adopting to the services, trusting the business, trusting using the bank account of STONECO, and that's nice to see at the end. So now we can already rate the banking business. And look, guys, as I mentioned, I had the tendency in terms of the client base to go a little bit more into the neutral area, but I rated as negative. And here I rated as neutral. First I was very negative, then I rated neutral, because comparing it to the 1 year ago numbers, Q1 and Q2 2023, and maybe it's even positive. So I tend to rate it as neutral as well. Yeah. So far it doesn't look that bad actually, guys. It doesn't look that bad, and honestly, I'm very honest to you. I'm not affected by that now the price is increasing at the moment aftermarket. That's not the reason why I'm doing this, and I just want to stick to the market opinion. It's honestly my own opinion, very, very honest about this. But however, guys, let's go on and take a look at the credit. And credit clients, the issue is a little bit, as you can see here, they didn't show those numbers in the past, yeah. And so it's difficult to compare them. So we just compare them basically quarter over quarter, yeah, and keep it a little bit very simple. Let's say it like this. However, let's take a look at those credit clients. Wait, let me check if you can see everything. Yeah, it looks good. And we have it here, and you can see, I mean, Q3 to Q4, and of course there's seasonality, but again, we keep it simple. It's basically 4,000 to 11,000, so 7,000 more, yeah. And then it goes from 11,000 to 19,000, 8,000 more, yeah. So one more time, maybe I write it down, 11K, and here we have quarter on quarter with 7K, and yes, there's maybe some seasonality existing. However, that's the client-based development overall, or actually it's more than like 8K. And now we have an increase of just 5 till 6K, let's say 5K. Not convincing me, guys. Just on this really it's basically very non-professional what I'm doing here from my perspective. However, I need to give it somehow an opinion, and just based on this, I see it's somehow very small, and maybe if Q2 is not a strong quarter, based on the seasonality whatsoever, don't like this too much, yeah, and I rate it as neutral, as red. Client base is red, yeah. That's how I keep it. Working capital, on the other hand, looks quite solid. I mean, you can see it here, quarter on quarter increase of roughly 200 million, a little bit more than 200 million, 220 million Brazilian real, and now we have a working capital or credit portfolio increase of 150 million. Yeah, doesn't convince me as well so much, but it's just reasonable. I mean, if the credit client base is not increasing that strongly, how should this increase that strongly, yeah? And yes, I mean, all of this we need to keep in mind. Numbers are a little bit missing, and we need just more experience, more metrics, more data history basically, and then we have a way more accurate feeling about this. However, I rate it as, I keep it strict. Let's keep it strict here. I guess it's not that negative actually, because before it was 220, now it's 150 million. Maybe it's not that low actually, especially when we compare that the new the new customer base is not that strong. However, okay, and let's take a look at default, and the default rates as well. So again, they should keep it low or at least on a solid level, and both for me increased quite heavily. No matter if we compare it, I mean, if you compare it as well to the earlier quarter, to Q4 2023 and Q1 2024, doesn't convince me. I mean, maybe this seasonality has really a strong effect, and Q2 2024 is just not running that well. But if that's not the case, and I assume it's not that heavily the case, I don't like this development as well. And I can keep it very simple here. I mean, this one I push it red, and that one, because look, it was Q4 to Q1, it was like 1.2% up, and now it's only 1.1% up. I could even think to, no, I rate it as well red. Come, let's stick it like this. Credit red, the new potential driver, the business sector I utilized for the headline of this video actually and for the thumbnail is maybe not a strong driver, at least right now. But just my opinion, and again, one more time, I'm not a professional. However, I see no other option than rating the credit business a little bit more red and negative, let's say it like this. And now we go to the software business. As I mentioned, I loved about STONECO, and really, I checked a lot of different kind of payment terminal, public traded companies like how is it called? Man, it's 2 or 3 years ago. And then how is it? 4? Was it not called 4 or something like this? Shift 4, yeah, from the US, for instance. Shift 4 and STONECO have been my final potential point of sales provider companies where I was interested to invest money in, and I decided for STONECO. First of all, because of the market, I just see more potential in Latin America compared to the US. I see less competition. I see more future in terms of the growth of the overall economy and more potential in terms of a potential stable currency and all of this. So I've decided for STONECO. But another big driver was really this ERP software business of Links. I like this potential of synergies between the point of sales terminals, the software business, and even granting some loan and some credits to the customers and some bank account access or whatsoever. I like this very, very much, those synergies. And software business didn't went well at all. And I always waited for this kind of upselling, cross-selling, achieving new software customers because of the STONECO legacy business. And last earnings call, they mentioned, the management of STONECO, they mentioned, actually it's not working like I expected it. It's like they're getting access to new STONECO and new banking and credit customers through ERP and software solutions, through Links, and not vice versa. They don't get so many new ERP software customers because they are successful with their banking and credit and point of sales terminal business. That's not the door opener. The ERP business is opening the door for the other businesses. And then, okay, at least I understood that I was waiting for the wrong information, the wrong impact. You know, I always wanted to see software is somehow creating a lot of momentum, but they are simply not utilizing it. However, it recovered in the last quarter, and now I'm actually very, very curious about figuring out if it's celebrating a comeback, because at the end it's not a small business, and even though it's just participating with 10% revenue, it's software business at the end, yeah, and it's active in 17 markets, yeah? So there's really a lot of potential, and it might open the door as well for the payment solutions for STONECO. So international business, who knows what will be the news in the future, but I want to see that software business is still stable and solid fundamentally. So let's check out what is going on with the software revenue together. And here we go. Live price actually is 1% up right now, but that is not that interesting. I want to see the software revenue. Let's see if I can find it without any support of the search function. Yeah. Maybe they adjusted it as well, the structure. Cost serve. No. Okay, here we got it finally. Here it is, guys. Let's go on with it. And we have it here, 384 million Brazilian real. And it's looking quite good. It's looking okay. Let's say it's looking okay on the first glance. Okay, I transfer it. 3837. Okay, let's go on to the software adjusted EBITDA. And integrated into the same table. Adjust EBITDA, here we have it, and here's software. Oh, so that doesn't look good. 63.9 million. Ay, 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 ay. And the margin is here. Okay, guys. Oh man, I would love, honestly guys, I would love that somehow in this direction the company is surprising, but for me it looks more or less not that surprising, because last quarters the software business already suffered somehow, and you can see that stopped a little bit here, but yeah, okay, they have a 0.2% growth year over year, but you can see it compared to Q1 2024 year-on-year growth. It's looking not that good. It's not going up like maybe you would expect it will be the case. Slightly stronger. I mean, I would be happy already that it's not lower. Okay, it's a difficult one for me. I guess I rate it as neutral, look guys, because why? Neutral with a strong tendency to red, to negative. Why? Because from my perspective, from my opinion, you know, it is at least stronger than 1 year ago, and in the past you can see it was suffering really strongly. It was below 360 million Brazilian real, and somehow it's recovered last quarter, and maybe last quarter was just a quite good one with 3% year-over-year growth, and so maybe 0.2 is not that heavy negative, but no. Guys, I don't want to lie to myself. I don't like this too much. Let's keep it like this, yeah. Okay, I see it's a little bit small for you guys, so here you can see it better. And now we go to the software adjusted EBITDA, and here it as well decreased year over year compared to year over year 1 quarter ago. The year-on-year growth, and it's lower than Q1. Okay, it can be a seasonality, but 1 year ago, as you can see here, that was definitely not the case. Not sure if there are one-time effects existing. We can check out in a moment the slide deck one more time, and then we can check out the first market reactions. However, that's negative for me as well. And then adjusted EBITDA margin, I just compare the revenue and set it in ratio to the adjusted EBITDA. So I hope I'm doing this correctly. If not, please don't blame me on this too strongly. However, this as well, I mean, it will not have a strong effect in general anyhow, yeah. However, yeah, it's as well, year-on-year growth is negative, and last quarter it was positive, and yeah, let's keep it simple and put it in red, and ERP software business as well red, and look, I mean, revenue development wasn't that great, but it's not that heavily convincing me. It's really not that heavily convincing me. Maybe we now go quickly. Let's go quickly to the presentation slide deck. And let's see if we can find something interesting. I mean, it's a little bit already, the stream's already live for 1.5 hours, but because of 3 guys or 3 persons are still present here at the stream, and I appreciate this very much, I will keep it live for sure. Maybe we can squeeze out some more information. So all of this is what we already covered, very likely, with all of our information. Adjusted consolidated growth, okay. Payments, yeah, that we covered this. I want to see a little bit something about software, which is interesting for me. Take rate, maybe we check quickly here the take rate if there's some information. So MSC table was flat sequentially. For more information about reconciling our report take rates with our, please refer to the build up take rate tab in our results spreadsheet. Okay, and they have a results spreadsheet. Oh god, now it's getting crazy, I guess. Okay, I will not do this. I will not. That's getting very likely too crazy from my perspective. Okay, let's go back and let's check out what is going on. Banking, impacting floating revenue. Okay. Yeah. Software. Let's see what is going on over here. Yes, they're stating verticals overlapped. Yeah, they mentioned they will set a higher focus on gas stations and retail stations in 2024. That is their core client base for this year, and they try to offer them bundle offers, credit and banking solutions and products through the software. And so here they mentioned that somehow some synergies are existing, but however it's not convincing me at the end. Yeah, and what we have here, vertical software revenue, and I'll check one more time if my numbers are correct, but yeah, it's just a vertical one. Yeah, okay, but here's the total one, and here we have the 0.2 vertical one. Looks a little bit better with 3% up, but what is going on here? Decreased due severance costs. Guys, I need to really, sorry for this, but my English, if you not experienced it right in the past minutes, then you will know it right now. I'm limited here. Okay, guess there is a 3.32 million. Yeah, okay, so I mean there is some kind of a one-time event, yeah, in terms of adjusted EBITDA, in terms of profit, but however 3.2 million Brazilian real would not change that much in terms of adjusted EBITDA, but you can see it here. It would at least be higher than one year ago. However, really guys, I mean last quarter as well there was some one-time event in terms of revenue, and I think in terms of adjusted EBITDA when we talk about the software business. And then it can't be the case that every time there is some one-time event and somehow they can exclude it and everything is fine. So doesn't make any difference for me. Yeah, doesn't make any difference for me. Let's take a look at the cash generation. So at least they're generating some cash with roughly 120 million Brazilian real or 20 million US dollars basically. So cash is not a big issue. And what I really don't like, guys, really, if that's the case, one more time here, it's not only at the press release the case, it's as well on the presentation slide deck the case, if I'm not missing anything, yeah. But they are not showing anymore the 2027 guidance. Is this really the case? Because that was always a big aspect for me to invest into the stock, and because I mean, those of you who are invested now, I searched for 2027 this document, and I will search here as well for 2027. That is what I really don't like to see. And when I take a look at guidance, it's the same. So they're not focusing anymore on 2027 and on this referring not anymore to the strong credit portfolio outlook for instance, net income, adjusted net income of more than 4.3 billion Brazilian real, quite low expansion increasement. Okay. No, so if you can see it right now, that is really just my opinion. But this is something what I really don't like. Really don't like. No matter what the price is doing here right now, and if it's up or down, even it's getting up 20%, I would not understand it. And if I would drop now to 5% negative, 10% negative, I would totally understand it. Just my perspective, because if it's just the only aspect, then because what is going on with the 2027 long-term guidance? I mean, maybe guys, please let me know something in the chat if I'm missing it somehow, but I can't find it anymore, and that is not a good sign at all. No, I don't like it. I personally don't like it. However, let's go and focus now on the final verdict. And for this, when you are a loyal viewer of my channel, we can go to this PowerPoint sheet. And here we have all the different metrics we covered today. And guys, rubbing my hands, but a little bit more like it's not that unlikely that I will sell my position actually in the future. I will sleep a few nights over it and check the call. The call will have a big impact, but I'm not that satisfied with the outcome, with the performance of the company, honestly, guys. However, we checked all those numbers together, as you can see here. And I'm very glad that 4 of you stayed patient through the whole process, because it just generally takes some time. Here, lone mover man writing game over. Might be the case. But at least in the past days, I achieved some yield. Yeah, but on the other hand, maybe with some other stocks I would achieve higher yields. However, maybe I can decrease a little bit my debt level, which is still in the low 5-digit number, and by selling STONECO, maybe I'm neutral level. However, guys, EPS was okay, was very solid, not that surprising positively, negatively, but it's solid for sure. So I rate this as neutral, and the revenue development as red. So let's go here to this one. This was neutral. This revenue one was green. And now I will not go through all those different single KPIs and just do it very quickly. Let's go to the Excel sheet, and we can see it right here on the right side of it. When we take a look at the more detailed section, MSME TPV was green, the total payment volume. The client base was neutral, could grow stronger, decreased slightly year over year. In terms, compare year over year growth, Q1 24 to Q2 24, but still neutral. And take rate, they kept it solid, very likely on purpose and with kind of awareness. But however, I like to see that it's increasing. So going back to it and pushing it further. That one was neutral. That one was green actually. This one was neutral. And this one was negative, and overall I granted it at least a neutral rating. Yeah? And to save a little bit time, one more time going back to the slides or to the Excel sheet, you can see the banking business and the credit business was a mixture out of red and yellow. Red, so positive, neutral and negative. Man, I need to go to bed, guys. So the tendency when we talk about credit, which was a strong hope for me, is very, very red, and compared to banking, it was already a hard decision to put it into neutral. So the tendency overall was a little bit more neutral to red, and this is for sure very red, so I push it to red. So let's go back and lock this in. Here it is. Credit one is red. Banking one was neutral, even though not that convincing. However, the overall, I push this in red. And then we take a look at the software division, and here as well, honestly from my perspective, not convincing when I just take a look at the core numbers. Yes, maybe they're granting now more insights, and I need to check this out with a little bit more time at the weekend, and if it should change somehow my opinion, I will let you know. I will definitely share this at my social media channels, and so make sure you follow there to always be up to date in this regard. However, when we take software, it doesn't convince me at all, and so very clear for me as well, a negative outcome from my point of view. And so overall, I mean, oh, wait. Profit, revenue, they missed actually, so it looks like this. It's not 100% clear. It's not like strictly bad or strictly neutral or whatsoever. It's definitely mixed, but I would rate it overall, and I'm sorry for this, but one more time after the last quarter it was just because more or less because of the revenue and profit top development, but here even when you screen it on a more detailed scale, doesn't convince me too heavily, guys. Doesn't convince me too heavily. It is how it is. And guys, now let's check out the first market reactions by taking a look one more time on the price and taking a look on Seeking Alpha on this investment platform, and see how different kind of users are reacting to the price. So first of all, one more time, checking out the after hours price, and I guess this will get affected as well by the earnings call. Let's see what the management will communicate. However, I'm not sure. I don't think that will change too heavily right now just because of the earnings call. I expect that tomorrow till the closing bell rings, I expect that it will be in the red by something like up to 5%. Would not surprise me. Just my personal opinion. If it's not the case, I'm happy, because maybe I will sell the position, and if I sell it, I get a little bit more money. But yeah, let's see. But honestly, I don't think I sell that quickly. I need more time to really check out the earnings call at least. I'm invested in this company since at least 1.5 years, and luckily I'm up, but I'm not selling that quickly. However, let's go to Seeking Alpha. Let's check out the position of STONECO and the first reactions of the market. And here we have a few one, and here are them. And the first one who reacted is this guy, Jim Ohio, good news or bad news, and Iguana 7259 mentioned looks okay, double beat and continued growth despite headwinds. Honestly, I don't see this double beat. Revenue was not a beat from my perspective, at least based on my numbers here, based on investing.com. And it was just a beat on the ABS base, so I don't see it like this, honestly, guys. And here, yeah, okay. So this feedback is not adding so much, actually. And one more time, they just referring to 2024, guy. What? Don't like this. That's for me the strongest aspect. Because, guys, one more time, when you check out the latest earnings roundup of Q1 2024, yes, I rated it negative already because of the revenue and the profit results. All of these KPIs in the background which are working, I rate them neutral, which is perfectly fine. In my world, neutral is positive for others, I guess, yeah. But there have been some negative developments last quarter, and you can see it here. It was more or less the key account development, what is actually now somehow recovering, yeah. The cross-selling was going very, very bad with the AirPack development, and this time it wasn't recovering that well, but I rated it neutral because maybe it's just seasonality, and that is not that important. But there have been some positive stuff, and the software division was recovering. I can't see this anymore right now, maybe because of some one-off seasonality events whatsoever, but that doesn't make a big difference for me. The client base is easily available. That's still the case. I think they're covering now with 2.8 million or 2.7 and something million banking customers. They're getting closer and closer to this 3.9 million right now overall payment client customer base. So still a lot of room for development, no doubt about this. That's still greenish. But what is going on with the 2027 guidance? That was for me the most crucial aspect. Really the most crucial aspect, that they stick to it and they told this is not in danger, it looks good right now. Yes, of course, if it's changing, they should not tell and keep telling 2027 guidance is still fine. However, not convincing me. And I mean, you can see here that are the valuation for the stack from my perspective, but at the end of last month, 31st of July. And you can see that based on those numbers, the old one 12% year-on-year growth, and it was just I think 9% year-on-year growth this quarter. So that's okay. It's more a profit-driven growth. Yeah, it has nice outlook when we take, or perspective when we talk about 2024, 2025 expected EV sales ratio. That was on roughly 2, and price earnings ratio of 9. That's great, but my fair price multiplicator wasn't that heavily positive. Yeah, I mean, you can see it. It's comparing. Look, you can compare it to another financial fintech company like PayPal, and PayPal as well is more expensive from my perspective than STONECO, but it's not dirt cheap. It's not dirt cheap compared to the other companies I'm a shareholder of. Really, not for an emerging market company, not for a company which here and there struggles with the results, struggle today as well with some kind of aspects. Just my perspective, guys. Make sure you do your own research and your own decision one more time. But yeah, and you can see it one more time here. It was already ranked at my least favorable stock I'm a shareholder of, and I'm already invested in the Latin American region, in the Brazilian region with Nu, and that is way more. I'm way more convinced by Nu than by STONECO. I have even more financial exposure with Grab, because they're rolling out in Southeast Asia the banking business. We will cover this stock tomorrow actually, at lunchtime in Germany and early morning in the US. So make sure you join if you're interested. However, it was already really not that great valued by myself, and I think even the earnings results before, I think even Q4 2023, I think I didn't rate it positively. Yeah, so, and maybe there's a reason why Warren Buffett and Berkshire Hathaway de-invested their money into the stock. So yeah, guys. I would love to see another outcome. On the other hand, again, I will sleep over it, and I will make sure I'm not doing a quick wrong decision. But I would not be surprised that I will sell the whole stack of STONECO within the upcoming days. Maybe even already tomorrow, if the transcript of today's earnings call getting uploaded very soon. And then, yeah, let's see. Very likely I utilize the money which will come out of it to just decrease the debt to a neutral level. No debt anymore. That's as well a great feeling in periods of high interest rates. Or even I will maybe, let's see how Grab will develop. Maybe I purchase some more shares. And when we talk about Grab, guys, we can talk as well about the tomorrow press release and earnings release, which will take place for Grab, the Southeast Asian deliveries, mobility, and financial service provider. Very interesting companies, kind of a super app they're providing in those markets. It's really like the wording, grabbing a taxi, grabbing a cab, is really standard in this area. So it's really like Google something. Yeah, it's their own wording what they have established, because it's that popular. And if you are interested in this kind of business and blend out of Uber and PayPal and Nu, like banking business, which is their newest driver, don't make sure to miss this. Yeah, I mean, you can check it out live. What I always appreciate more if you interact with me a little bit. But if you are busy or whatsoever, it's again, the time is a little bit awkward with 6:30 a.m. ET or 12:30 p.m. CEST. Then feel free to watch it later on, or you watch my earnings roundup, which will I provide in the upcoming weeks, where I even consider the call and give you a little bit more information. What is my final verdict about the earnings results? And then, of course, the exotic week is already done almost. Yeah, yesterday we covered Nubank. Today we covered STONECO. Tomorrow we will cover Grab. And then, last but not least, we will have next week Alphen, quite an exotic company as well, even though I guess for people who are locals in Europe. But however, I will guide this next week Thursday on the 21st of August. And then we will finalize the earnings season from my side at least with the cybersecurity vendor out of the US, Sentinel-1. Very interesting company, especially when we talk about this development with the outage of CrowdStrike, of one of the biggest cybersecurity players out there, and how the market will now develop. Very interesting situation. Guys, would make sure to not miss it, and that I will guide and back in the week after Alphen release, so 27th of August. That's the case. Guys, if you like the stream today, first of all, thank you very much for joining. Yeah, I have seen that always some people have been present here at the stream, and I highly appreciate that very much, especially because of the stream was live for almost 2 hours. And if you could live with what I've did here in the past minutes and 2 hours almost, I would highly appreciate if you leave a like to the video, if subscribe to the channel, and if you follow me as well on X, on Instagram and on Reddit, to support a little bit my work and to motivate me to keep on track, because I can tell honestly sometimes it's really harsh to stay on focus, especially when that's not your primary work at the end, you know. Of course I'm doing research anyhow because I'm invested in these companies. I'm only backing the companies I'm in general invested in, but on the other hand, yeah, streaming and all of this always takes a little bit of time, so I appreciate every feedback which I can get, and it keeps me motivated, yeah, and sleep better, guys. And I see here Lone Mover Ma'am is pushing a clap emoji and a thumb up emoji in the chat, so highly appreciate this. You are very loyal always to me, so really very thankful for your support. And TJ8073 just used the chat, and I like this as well. But what is he writing? Business has been very promising, but management's execution has been problematic. I love the business, but I'm very quickly losing confidence in the management ability. And I'm sharing this opinion 100%, TJ, 100%. And again, please don't rely on what I'm telling. It should be your own opinion. I want really make sure that nobody's blaming me now or in the future. Yeah, but I'm sharing this, and I communicated this in the past minutes, I guess, quite strongly, that I'm more tending to sell my full position than to keep it like it is, or even purchasing further shares. And yeah, they had a lot of times management restructuring processes which they covered, and maybe Warren Buffett had the insights, or his management team had the insights we didn't have. We are more working on distance and more working based on the numbers. And I'm in general more convinced by revenue growth companies than profit growth companies. And that's the last profit growth company I'm invested in. I love the business, like you, TJ. I love this point of sales terminals. I loved it when I was delivering pizza, as I mentioned at the beginning of the stream. And I still love it, this business case. But maybe for me, at least right now, at least, and I don't like to say it, but because it takes time to read a lot of information, getting used to the business, and as soon as you are in it, you dig in it, it's not that nice to get out of it, of a company. I guess I very strongly assume that you know this feeling, yeah? It's always nice if you find a new one, you dig into it and all this information, and you adopt to it, and then you are convinced. And going out of a company is always not that nice if you are that intensively invested and you really invest time. But however, you're doing this because you want to stick close to the business, stick close to the developments. And if they're not developed as expected, I think as a consequent, modern and somehow competent investor, you need to make a cut in the situations. Yes, you need to grant time, but if it's not, the outcome is not like expected, it is how it is. And yes, I was in STONECO, I was up, I think 80% or something like this at the peak. and now I'm only up something like 20%, maybe without repurchases in the past months, 25, 30%. It is how it is, man. I'm not think it was a wrong decision, and I'm not 100% convinced by the decision. If I'm selling my shares of STONECO, I definitely share this development with you guys again on my social media and as well on YouTube. But yeah, I can imagine that will be the case if the management somehow is not communicating something very, very different or whatsoever. I will very likely not stay patient anymore. But let's see. But really, the most crucial aspect for me right now is really this missing 2027 guidance. That is something really okay. Software business is not going so well, but at least the credit business is going well, banking business, payment solutions getting rolled out more heavily. All of this went very well from my perspective, and that software not working, that was really negative for me because that was really a strong business case for me. But okay, that's fine. Yeah, that it's not convincing me anymore. At least the other stuff was executed quite well. But now that the 2027 mid and long-term guidance somehow is missing and not focused, I guess I expect that the analysts somehow asking questions in this direction. I would be surprised if that is not the case. But if it's the case and the answer is not a good one, let's see. Maybe one more time I want to check with you. What is the price? And it's still up there. Aftermarket 0.4% roughly. At least something like this, and it's not somehow getting cracked completely. However, if the transcript going live this night and I can read it and it's not, I have time to read it and it's not convincing me, I will leave this chance ratio risk situation, and I will share my sales. God, I need to sleep. I will sell my shares. TJ as well, thank you very much for the kind words which you have left in the chat as well. Guys, thank you very much so much for joining. Make sure, no matter what I have mentioned during this earnings stream, to really check out by yourself the information. Maybe I added some not correct information and copy pasted them wrongly or whatsoever. Please don't blame me for this, and sleep as well over it. Make sure that you're doing the right decisions no matter what you're planning to do with STONECO. Maybe you're not even invested and you want to invest right now. Maybe I'm completely wrong, then go for it. Yeah, really, that's the beauty of this hobby and this kind of thing. I love it very much. It's my strongest hobby, to make research and guide those companies and always have this kind of bet, like a racehorse, different racehorses on track, and let's see what they bring on the table each 3 months. I love that very, very much. It's really some, it's almost love. Let's say it like this. I like this very much. And even though this kind of experience like today happened, okay, it's part of the business and part where I'm doing this, yeah. And I like that maybe some of you of the audience, you say, no, now I see completely different, I have a totally different opinion, and I see this kind of potential, that kind of potential, and I had it on my watch list since quarters, and now I want to invest. If that's the case, would love to see it like this, yeah. And share your opinion, send me a DM if you like, if something like this is happening. If you have seen something different than I, let me know. Maybe I will share my opinion. And but yeah, it is how it is right now, guys. But however, most important is that you stay healthy, you take care of yourself. Staying healthy, I think, is the most crucial aspect in life. And no matter what kind of money you have on your bank account, or if you don't have any money on your bank account, even more negative, but however, all of this doesn't matter at all if you're not healthy, I think. So that's most important. Stay healthy, guys. And see you next time in the stream. Yeah, man, Lone Mover, man. All the best. See you next time, maybe tomorrow at Crab earnings call. I will check out now the STONECO transcript. If it's already live. Stay confident, stay positive and optimistic, of course. And see you next time. All the best. Cheers, guys. And bye. I'm out.
A sense of capital.